Hi guys, in this video we'll talk about displacements and retracement and understand the difference between both of them. It's really important to understand when there's a displacement happening and when it's a retracement happening. A displacement it pretty much is a strong aggressive move caused by institutions. It's usually happening, when banks opens or when there's an overlap in the sessions. This cause an imbalance in the market or create a fair value gaps. And us as a trader, after we start seeing displacement, if we are not inside the trade, we want to wait for a retracement. Retracement is a calm pullback after the displacement start happening. That gives us as a trader a chance to enter the trade in a better price. Or if we are already on the trade, we use the retracements to get another contract or to place a second trade. Think as the displacement as the engine. You start the engine, and the retracement is a little pause before you continue to drive the car. So what is a retracement? Retracement is a small pullback inside the overall market direction. Retracement, you got to understand that it's not a bearish momentum of the market. The market is not changing completely direction because it probably hasn't take off. This level over here hasn't take it out yet. The market just doing a small retracement. So if you place a buy over here and you have a Fibonacci throw, and you can see as this level is marking the perfect zero point 0.5 Fibonacci, you can see here, or even the zero point 0.8 around here. You want to hop in another contract over here. If you place only one, or you got money to lose, you want to hop in here. So if you didn't place a trade, all the way down here, and you haven't placed a trade yet, and this is a displacement happening, you wait for the retracement, zero point 0.5 level Fibonacci, and then you enter the trade over here with your stop loss down here, or even down here. If the market go down, it doesn't take you out that much. This is the displacement. It's way more aggressive than the retracement most of the times. And like I say, you should wait for zero point 0.5 Fibonacci level. That is the discount price for you, to get a cheaper price for a better entry. And what is a displacement? Displacement is the real market push. It's the real market overall momentum. Where is it going? Is a market structure. It leave fair value gaps, as I say in the first slide, and it aligns pretty much with higher time frames. When you go to 1 hour, 4 hours, you can see like the market is pretty much just respecting those overall time frames. And how they work together. You should, like I was saying before, you should know that you get it into the trade, you wait for the small retracement, and then you get into the trade again. And you use the other levels, like extension levels or 1.0 levels, to get out of the trade, or to move your trade to, if you get into zero point 0.0 Fibonacci, or you got into the trade and you start seeing displacement into your trade. You place your Fibonacci and you go like, oh whoa, this might be a great Fibonacci trade. I might don't get out of the trade. You over here, and you might go like, oh, this is zero point 0.5. Let's see how the market does, and you can see the market barely react, to keep going down. So you want to probably stay in the trade, and you already see the small retracement happening at zero point 0.5 and didn't do nothing. You might want to go ahead and move your stop loss to zero point 0.5 in case the market all the way over here decide then to go to zero point 0.5. You don't get stop out or lose all the money. So in here we have a great example, as I was playing in Fibonacci the video before. This is a good example. You place a trade here, market come here, grab liquidity from this level over here. You can see the market start creating structure. You see that push over here, or you go like, okay, let me pull a Fibonacci. You pull the Fibonacci. Let's say you enter the trade around here, right? This is an example. You enter the trade here, the market push you up, you're here like $2,000 in profit. So you know 0.5 Fibonacci might be over here. So you wait, the market pushed here to 0.5 Fibonacci, and then you move your stop loss and you move it to here. You know, the market, you waiting from here to the market to keep going up like it did. But then what? The market is gonna go back down to retest the zero point 0.5 Fibonacci. You know, let's see like you didn't push your Fibonacci all the way there. You put it like more in a more logic way over here, right? So you can see your zero point 0.5 is over here. So the minute that you can see the trade going back to your zero point 0.5, you might want to get out of the trade, or you want to, if you didn't got stop out, you want to, hop in another entry, you hop in another contract over here, and when the market push back up, you're in a good profit. So that's pretty much guys how I want you to understand what's a displacement. You can use Fibonacci's to understand if your trade is displacing to your target level. Early tonight, it's around like 3 a.m. right now, but early in Tokyo, I was talking with my guys, my traders, and I told them that we might see London pushing the market all the way, back to 4040. That's exactly what it did, and I didn't. I was not able to, call the trades, but Fibonacci was respected. I caught a trade around here. I bring one of my accounts back and break even after the loss of Tokyo that I sent over here. But overall, this is a good example of what is a displacement and how to use a Fibonacci for that, and how to use the trading sections for that as well. You have a Tokyo over here push the market up, and you got the huge volume of Tokyo, which is a nine. Keep the keep the market there. It didn't push it down. And then you got keeps having late Tokyo session, uh, early Tokyo session, move the market up. You have a little bit of retracement here, but it's a retracement to zero point 0.5 Fibonacci right after late Tokyo session, which is 12 o'clock. 12:15, the market shoot up as it has been doing for the past week, and we pretty much respect it really good. The whole Fibonacci almost all the way to 1.0 level. So, guys, this is pretty much it for displacement and retracement. I hope you understand this is a retracement here. You guys understand this is a retracement as well. And this is overall the displacements of the trade.